Hello, everyone, and welcome back to the Trader's Mind Chat Show. I'm Mike Lamott, and I have a question for you guys today as we jump into things. Have you ever gotten shaken out of a trade and immediately felt the urge to go back to the scene of the crime? Jump back in and, I don't know, maybe try to make things right. It's something I think that every trader faces. I know that I have. It's it's not something that you need to feel ashamed of, but it's ultimately going to be unproductive. You may feel like you want to play Sherlock Holmes at times and immediately investigate what went wrong and maybe why it went wrong. But there's a time and a place to put on our detective hats and go find out what went wrong, but it's not going to be in the heat of the battle when emotions are high and prices are still bing, 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 flashing on the screen. That's not the time. Right now, there is no mystery. Right? The issue is not the market, it's not even your trade. It's not your trade plan or where you placed your stop right now. The issue is your own emotions and those emotions that are driving us toward bad decisions. So, why revenge trading happens and its impact. Revenge trading happens to all of us. It's one of those things that is real easy to spot in others, but can be difficult to see in ourselves. No one wants to own up to placing revenge trades or even having tendencies or habits that lead to revenge trading. That's somebody else's problem, not me. But when prices go against us, perhaps trigger a stop loss, reverse, push with their way higher, questions can begin to swirl around in our minds. Did I place the stop loss in the right place? Was this just a shakeout before the next leg higher? What if I don't get back in and price starts to run without me? I'd be a real stooge if I didn't get back in and price left, right? So, what do I say to that? Not today, sir. No, not I. Then the next thing you know, you're analyzing the trade from different angles, right? Maybe you see what others are saying in places like X or StockTwits or Reddit. Maybe you hop onto a Discord or some other group and try to get feedback. You tell yourself that it's education, so you know better for next time. But you know deep down that urgency that's driving this need for immediate feedback isn't some insatiable desire for long term education, but it's something else. And this, my friends, starts the cycle. What we tell ourselves is good and well intentioned is a cloak for revenge trading, and we don't even realize it. Spotting the signs of revenge trading. I'll tell you what I used to do. And when I was shaken out of trades, and you know what? I see a lot of comments coming into the chat already. That's wonderful. But you tell me if you've done any of the following. As I mentioned them, just type yes into the chat if you hear something that you've done, and feel free to type in yes multiple times. So here's what I did. First, stop loss gets triggered. I'd hurry to the chart in a panic. I'd quickly check my P&L to see just how much damage was done. Then I'd look for the news from places like Investors Business Daily, Benzinga, the Wall Street Journal, even Market Watch. And I'd try to find out why price dropped. Then after that, sometimes I'd find an article, sometimes I wouldn't, sometimes I'd find conflicting articles. So after that, I'd hop on over to Twitter. I'd go on to Stock Twits and I'd start to see what people were saying. Number 5, I'd see what people I follow were saying, not just on the thread of whatever stock got stopped out of, but what the people that I actually cared about were saying. Often there would be some good but general sage advice, like seeing people getting dislodged from good positions and the need to be patient. But the thing about that, the thing about that is that when you take sage advice and let's say you put it on a cupcake, it doesn't taste so good. There's a time and a place for everything. And if you mix up good ingredients like sage and you put it on a cupcake, this is what you're going to get. It's not going to be good. Then number 6, by this point, I'd feel as though the trade was leaving without me. So I'd hop back in and often with some half-baked plan, and sometimes I'd win and sometimes I wouldn't. So you guys tell me, how many of those have you done? Type the number into the chat. Let's see how many we get. I think that I'd be surprised if you haven't had at least one of those. So let me know how many you've had. Let me know if you've had maybe something that wasn't mentioned there. Got a bunch of stuff coming into the chat already. Let's see. Alberto says, you believe you're 100% right about the stock selection. It has to go in the direction I predicted. You need to be proven right. The market is clearly wrong. A very dangerous scenario. I completely agree with that. Very dangerous scenario indeed. Let's talk about some practical tools to stop revenge trading. Here's what you need. What you need is a kill switch. And no, it's not just a band. What you need is a kill switch. Things that will interrupt these patterns and help you break the cycle in the moment when you need it the most. From my experience, questions are the answer and serve as the quickest path to pattern interrupts. So here's what you're going to do. Go get a pen, get some paper. I'll give you a second to do this. Get a pen, get some paper, and what you're going to do is write out some questions for yourself. So I hope that you're ready. Here's some of the questions that I've written for myself. Number 1, is this a setup that I trade? Number 2, is this a quality setup? Number 3, is this an A-level setup? And number 4, how does this stack up versus other opportunities? I think you get the idea. You want to come up with, you could use some of these questions as starting points, but you want to have a laundry list of questions that you could ask yourself that'll act as pattern interrupts. Use these, write out some more, and the next thing that you're going to do, you're going to keep this list with you at all times, right? So that, what does that mean? Yeah, it's going to be on your desk. Yeah, it's going to be folded up and put in your pocket. Maybe you're keeping it in your wallet. Maybe you're putting it in a bookmark and putting it in your favorite book. Wherever you're going to do, you're going to keep that whole list with you at all times. Here's the next thing that you're going to do. You're going to take a sticky note, right, or a Post-it, and write just one of those questions on it before you even turn on your computer each morning. Then what you're going to do is you're going to take that sticky note and you're going to put it somewhere where you could clearly see it. It might even be annoying to you, right? Maybe you're putting it right there, right in the middle of your screen. Or maybe you'll need to move it, but like you'll put it somewhere where you're going to see it for the whole day. Then the next day, you're going to pick a different question and you're going to do the same thing. You're going to write it on a post-it note and you're going to put it in a different spot, right? Don't do the same spot twice, not twice in a row. This is what's going to happen. By doing this each day and changing the spot, you are reinforcing the habit of asking yourself these questions while simultaneously not allowing it to become like the banner ads that nobody sees anymore, right? You know what I'm talking about. That's what happens when you keep on changing the spot of these things, and it's going to be top of mind. Next, you do want to journal. You do want to analyze. You do want to post analyze. But you want to have specific times when you're going to do this. Generally, I like to do this on the weekend when the market is closed. But you pick the time that's going to work best for you. One of the keys is to go to your calendar and block out the time. That way, it's real. It's a real commitment. You might even want to tell a family member or somebody that's affected by things on your calendar that, you know what? You know what? I'm blocking out this time. And it's for this purpose. What happens when you share it in this way, it creates a positive peer pressure. Not only is it blocked out, but you're telling somebody that you've blocked it out for this purpose. I think that 1 hour a week is a good starting place. All this stuff I talk about, everything from all the habits, from setting up and blocking stuff on your calendar, all this stuff is discussed in the Trading Mind Wheel book. So if you haven't picked up a copy of this, this is the reason why I wrote this book, as a practical application guide for the rest of us, right? There's so much on technical analysis and how to look what stocks to pick and how to trade them. There's not a ton on the practical application of this stuff from somebody that's, trying to do this part-time. And I came up just like you guys are right now, part-time, full-time job, trying to figure this stuff out, learning from guys like O'Neill, learning from guys like Minervini, learning from guys like Darvis and Livermore, and they're all wonderful, right? I'm not knocking them at all. I'm friends with Mark, wrote the forward to this book. But, well, what you definitely have learning to do, and to be able to see things from a certain perspective and to know the types of things that you're going to need to encounter along the way. It's so helpful to see it beforehand. So that's why you've got this as an added handbook. So let's talk some real world examples. Some real world examples of when sometimes it's good to get shaken out of trades. Now, I want to give you two examples. One is Reddit, and the other one is VIRT. So let's take a look at Reddit. So here is Reddit, and my first entry on Reddit was right back here. Right, I entered Reddit right here. And I raised my stop up. I always like to try to get my stop to break even as soon as I can. The reason why is because I see the distance between where I enter and where I place my stop as my cost of doing business. So when I get that initial risk off the table, then that's money that goes back into my pocket and that can be recycled into the next trade. And the faster that I cut my losses, the less heavy lifting that my best trades need to go and do for me. So the ones that tend to work fairly well right out of the gate. So this one breaks out here, does a little funky dance. I raise my stop, and then I get shaken out of it. I believe I get shaken out of it right here. Price then drops, then reverses, and you might take a look at that and be like, "Oh man, that really sucks," right? And it does suck if you don't have a plan. What I like to do when I get shaken out of a trade, what I like to do is to turn off all the annotations and take a look at the chart. That way, it helps me to look at it with a fresh pair of eyes, because if I have all my annotations on the chart, and you saw, right? I like to draw all over this thing. It gets to be a mess. But if I have all the annotations on there, then it creates an anchoring bias where I saw where I got shaken out, and it messes with you, right? Because, well, I don't want to buy back higher than where I sold it. This thing turned out to be a loser, yada, yada, yada. And, that creates a lot of problems. So, what I like to do, turn off the annotations or even delete some of the annotations and then draw them again. And then when I drew it again, what I saw was, oh, you know what? This actually formed a cup with handle. And you know what? This chart, this setup actually looks better than what it did before with even tighter risk. So what I ended up doing was I bought here, right? I bought on October the 3rd. And of course, right, price triggers my entry and then closes on its low. And so that's something that can mess with you. But it's important to have rules to govern what you're going to do. So that way it's not about like, oh, well, here's a good decision, here's a bad no, you're the referee of this game. Right? You're not the player, you're the referee. So if this thing earns a spot back into your portfolio, you've just got to make sure that it follows the rules. It's not where you're trying to make money on this one or that one. It's if you follow the rules, following the rules leads to profits over the longer term. So enter him back here, and then price so far is up. How much is it up now? About 17% since getting back in on October the 3rd. Here's another one. Here's VIRT. Right? And here's what happened with VIRT. Get a little preview there, but let's fast forward a little bit and I'll turn on this tool. This is called danger signals. Right? Well, let's get rid of this annotation so it's not in the way. So came up with this idea of danger signals to help us figure out, well, what's the weight of evidence that's going against the trade? And the more that these danger signals start to stack up, the more it can tip over the boat. So this day is happening here, and I see that there's 7 danger signals, and I've got to go out. I'm not able to watch the closing that day, and it's just like, you know what? I'm gonna sell here. My I'm already profitable on this. I entered back here also on October 3rd. Price ran up. It was up at about 6-7% gain. That got cut just about in half to about 3.5% gain. And earnings is the next day. I've got a cushion, right? So I could hold, but because I see these danger signals, I decide that, you know what, I'm going to sell. And it's not just because I happen to find some indicator on TradingView and it's like, oh wow, that 7 seems like a lot. Well, let's sell. It's because I actually went back in time during one of those post-analysis sessions and I analyzed, well, when did my trade start to turn sour? And what I found was that in the early stages of a trade, if I start to get more than 6, then this tends not to be the kind of trade that goes on to do great things. Every once in a while, you get an outlier, but most of the time, these turn out to be losers, and they need more time to consolidate. It's not where they can't set up again like Reddit did just a few days later and then go on, but at least at that particular point in time tends to be a good spot to sell for me. So I end up selling there. Right? And then this happens. Right? Following day, price gaps down, drops about 4.5% in total on the day. At one point, it was down almost 8%. It would have not only triggered my stop at break even, it would have kept on falling. It would have shaken out the original stop loss, which was down here at $30.20. And now it's doing the funky chicken, right? Bouncing back up and hitting its head on the 50. And, you see what's happening here. So sometimes, not always, but sometimes getting shaken out of a trade is a good thing. Is a good thing. So let's do some Q&A and I'll see what questions you guys have here. We've got a lot of people joining us today. We've actually got, wow, this is the most that we've had in a long time. 240 people joining us today. Welcome, everybody. A lot of people over on X. Got a few people watching over on YouTube. Some people over on Twitch. We even got some people over on Instagram. Welcome, everybody. I'll do my best to answer all of your questions. We've got normally this show goes half an hour. So I'm happy to stay a little bit longer today since we've got so many people, but go ahead, type your questions into the chat now, and I'll take a sip of coffee and we'll get started. Someone over on Instagram just said that I just blew all of my rent money yesterday due to revenge trading. Yeah, trading is one of those things where it can lead us to a very profitable life, right? It can help us to get financial freedom. I wouldn't be here if I didn't believe those things. I wouldn't have written 3 books if I didn't believe those things, and I wouldn't have the profits to back it up. The thing with trading, though, is that there's not really a barrier to entry for trading, right? Like, well, what does it take to open up a trading account? You just go log into Robinhood or Webull, whatever broker. You just open up your account and off you go. Fund it with however much you want. Get some margin on your account, and now you're a trader. What most people have, from my experience, what most people have and what I had for the first 10 years, probably even a little bit longer than that, are trading hobbies. Well, what's a hobby? A hobby is something that you pour your heart and soul into. A hobby is something that you give a lot of attention to, a lot of time, a lot of effort, sometimes even a lot of money. But a hobby is not something that pays you. A business is something that pays you. And so what do you need to have a trading business versus a trading hobby? Well, you need a plan. You must have a business plan for your trading if you want to get it to the next level. So what are you going to put into a trading business plan? Well, it's more than just your entry and your stop and maybe where your target is. It's even more than, well, how much am I going to risk on this trade? That's a trading plan, but what is your business plan? What your business plan? Here's a few things that you should include in your trading business plan. Number one, what kind of setups are you going to trade? And clearly define those setups. Here, you know what? Let me show you an example. Right here's an example. I share this with our members, but it's not about that. So what I do, right, and here's the model book that I came up with. This is also in I talk about this in the Trading Success Blueprint, which walks you through how to write a business plan for your trading. I share this spreadsheet, or at least the definitions and the models inside the Trading Mind Wheel book, and this spreadsheet is shared with members of both our research program and our group coaching. So if any of that interests you at all, just reach out to me. Anyhow, what you want to have is a clear definition of your setups. And why don't I make this bigger? Because I see that people over there on Instagram might not be able to see this. So let's switch this up. Now, hopefully, everybody could at least see some of the definitions, so you get the idea. What you want to do is have a name for your setup, and then you want to have uh, how are you going to define this thing? What time frames are you going to look for it on? Right. So a lot of people will flip through time frames. 1 minute they're using a daily, sometimes they're using weekly, sometimes they're using a 1 minute chart. Where are you going to find your setup? How long should this thing be? How deep should it be? What's appropriate for it? What's the look and character of this thing, right? Can you describe it? Where on the trend should it be? Are you buying it while the price is moving sideways? Are you buying it while from an uptrend and price is just consolidating a little bit? Is it in a downtrend? Where in the trend is it? What general market type are you going to find this in? What takes it from good to great? And also, do you have some models of the setups that you're looking for? Screenshot them, and it doesn't even need to be a setup that that you've personally traded. It could be one that you pick out from a book, right? Maybe somebody else has found a model, but you want to study it on your own screen, so that way you get to train your eyes to understand the look and the feel of this thing. Trade it bar by bar. And that's how you're going to build that muscle. That way, when you are in the middle of the trading day and maybe you get shaken out of a trade and you ask yourself one of those questions on that sticky note: is this a setup that I trade? Well, you'll have that answer, right? Because you've already done the heavy lifting. But if it's just something that you read in a book, well, that's just about as good as reading a book on how to do push-ups, right? that it maybe you know how to do it, but until you actually do it, you haven't done anything. let's uh, let's get some more questions. That was a good one. Caleb says, I went back to the scene of the crime. It seemed like the right move. I still think it was smart on PODD. I was fine with the additional risk, but it just jumped it for minus 2.5 R trade. 1 R was fine. Oh man, let's see what this did here. So let's pull up PODD. Oof. Wow. How did that happen? So this is a trade that I was in earlier, and I bought into this. I raised my stop. I was shaken out this morning. I saw price starting to reverse, and yeah, you know what? Hey, if if it wasn't mentioned in the Discord, right? Because we have a private community for a group coaching. If it wasn't mentioned in there, the price was starting to come back up. I wouldn't have noticed, right? Because it's important to have times when I noticed that I'm not sharing the screen. This is what it did, right? So I was in this. I was shaken out right here, and this is when it was mentioned in the Discord chat that, wow, you know what, price is starting to rally. What do you think? And that's where I'm saying, yeah, you know what, like it's well, I go through my questions, but this is also something where I wouldn't notice it if somebody didn't bring it to my attention. And the reason why is because I also have a time and a place when I'm going to go and analyze trades. And this, that wasn't a time, but that is a gnarly move. And yeah, it jumped. Well, yeah, it would have been stop out again if I had my original stop, but it also dropped below the stop that I had the last time, right? So my original stop was 226.90 and I ratcheted that up to 232.90. And then this yeah, that folks is what happens with revenge trading and what happens to going back to the scene of the crime or not having a particular time for when we're going to analyze trades. Seriously, that whole thing that we spoke about earlier with the sticky notes and writing out a question and putting it there and keeping it in your face, that's going to keep that stuff top of mind. But you also want to make sure that you know what a quality setup is, that you have clear definitions for what your setup is. That, somebody, I just saw somebody else over on Instagram saying that, yeah, all that's fine, but it's not the real problem. It is the real problem, right? And no, it's trading is one of those things where because you're able to just open up an account on Robinhood, or maybe you're not on Robinhood, right? I don't want to pick on the Robinhood people. Maybe you're on Thinkorswim, maybe you're on Interactive Brokers, maybe you're on whatever. But because you're able to open up an account, you think that you know what you're doing and you want to defend what you're doing. If what you're doing was leading you to results, would you be here? Probably not. Right? Well, why would you come to a live stream that's called how to improve how to stop revenge trading, right? You probably wouldn't. You'd go find something that could help you with a problem that you do have, but you're not. You're here. So sometimes some things could be hard to hear, but if we want to improve, sometimes we need to look in the mirror and ask some of the tough questions. Alrighty. Any other questions, you guys? Any other questions? For those of you that are still with us, and if you're not already on our newsletter, make sure that you sign up to our newsletter. We put out a free newsletter just about every single day. You could go to marrowwealth.com/newsletter and get it. And that's the best spot. If you haven't already liked and subscribed to wherever you happen to be watching this, make sure you do that. And I think that is going to be about it for today. So hopefully this was helpful. Right? See, Caleb just snuck in a comment. Let's see what this is. I still thought it was quality when I went back in it. I saw it go up from the 21 and thought the 21 was support until that 15-minute bar. It, it's I would challenge you to say, well, why did you see it as quality? If you didn't already own it, would you be buying that stock? And if it's something where it's like, well, I have a certain rule on when I'm going to re-enter a trade, right? Well, let's pull this chart up again. So if you have a rule that says that if I'm in a trade and I get shaken out, here's what I do, and you have that protocol in place, and this fit every single box, and let's say you have your pre-flight checklist and you're going down the line checking off, okay, checks this, checks this, checks this, checks this, and you did all that, fine. Sometimes that'll happen. But if not, if you don't have that checklist, I would challenge you to create one. And even if you do have that checklist, maybe you could fine tune it. Something about the 5-minute bar. Let's check out the 5-minute bar. Yeah, it's nasty. Sometimes the best thing to do too is to step away from the trade. You have your notes. Come back tomorrow and with a fresh set of eyes, take off the annotations and then ask yourself the questions and try to be as objective with it as you can. And if there is somebody that's a similar style to yourself or somebody that you're trying to emulate, ask them how they would have traded it and listen to their answer. Yeah, every it, every now and again, right? Like so, most of the time when I get shaken out of a trade, I don't re-enter the same day. But the exception to the rule is probably shows up 1 out of every 10 times, maybe even more like 1 out of every 20 times. So, yeah, if you make a simple rule to once you're shaken out, and you're not going to jump right back in, that's something that can help you too. And then later on, when you have more experience, and by more experience, I say like try to uh, try a year, right? So that way you put that in the past, and then later on, if you want to, because you might develop a new habit and start to have success, and be like, you know what, I never want to start to re-enter trades again on the same day that I'm shaken out. But after a year, then come back and then decide, do I want to add this tool back in now that I have some more experience? Maybe you do, maybe you don't, but you'll have a much different perspective a year from now. So, all righty, that was a fun one. That was a fun one today. So, I thank you all so much for being here. It's been fantastic. I look forward to seeing you next time on the Traders Mind Chat show. We do have we have a schedule for these things, and I'm going to make that new schedule, this calendar, public to everybody, so you can just sign up, and then you'll get alerts for each time we're doing a public event, whether it's this show, whether it's the midweek update, whether it's a live event. In a couple of weeks, on November the 6th, it's a Wednesday, we're having an in-person meetup in the city. So if you're interested in that, drop me a note or follow me on X and StockTwits and all these places, because I'm going to be talking this thing up the closer that we get. And yeah, I look forward to seeing you guys, and Until next time, take care, much love, and God bless.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.